Thursday, but when I got here back in from taking a break from Costa County, it was about 25 after 12, and I was getting ready to come in the room and be ready to boot up. The fire alarm went off, and everybody had to go outside. The fire trucks came, and we had a gas leak somewhere down at the basement, and I don't know if it runs the air and the heat or what, but they got that cut off in about an hour. Clayton and Hillary showed up, and I told them to go home at about 1 o'clock. Uh, Not Clayton and Hillary, but Cole and Hillary. And they finally got the gas leak stopped, but not fixed. So they told us not to only go back to the building to get our books or keys or whatever. So I came back and got my computer out of the classroom, locked it up in my office, and went home. So that's what happened on Thursday. There was no live streaming, no video. Sorry about that. We missed a tax class. And you all just don't realize how close we are. Hey, Cole.
Howdy.
No fire alarm today, Cole. Now, Cole, have you taken that cost accounting test yet?
Yes, sir.
Neither has Jonathan, I think Savannah, and Hillary. Hillary's supposed to be here as we speak. She's not. You're here. Jonathan's not. But when are you going to take that cost test?
Once it gets offered, yeah.
Now, you got a class right after this one.
Yeah.
Are you here tomorrow? Can you come over
I
tomorrow?
can come in tomorrow, yeah.
I'm here from 10 to 2.
I can do it.
So come on sometime tomorrow. Okay. Jonathan, I hope you and Hillary can come sometime tomorrow. Did I make a statement last week? If you didn't take that cost accounting test by this Thursday, if you don't take it, something like that. Anyway, Clayton, keep me straight. Did I make that statement?
I don't remember it, but it's because I've already taken it, so I'm like,
Yeah, well, all right, here's our timeline. Today is 4/23. Thursday will be 4/25. Next week, what will Monday be? What will Tuesday be? Will that be 25 plus 5? Will Tuesday be the 30th? Will that be 4/30? Somebody got a calendar real quick? Thursday 25th, Friday 26th.
yeah, you're right.
All right, and then next Thursday will be May the 2nd. And then the next Tuesday will be May the 7th. This is exam week. So after the day, guess how many meetings we have? All right. Now, I know Turi has missed more than she's been here. She's an official live streamer from a long way off. Hillary is a long way off, too. But now Jonathan, he's probably 10 minutes off. Oh, wait. Cole's 5 minutes, right, Clayton? How far are you away, Clayton? Okay. Well, 30 and 10 and 5 ought to make it. Hillary needs to make it for a test. Terry took the test, okay, and called. Now back to taxes. Here's where we are. We've only had 2 tests in taxes, and you've seen both of those, and most of you've seen them. And we're behind. Now, first off, if I could get more than 2 here on Thursday, we need to go over a corporate return and fill it out. We need to do those M's and those retained earnings schedules. So print off 1120 with all the forms to it for Thursday. If I just have one of you here, we'll go over it, and that'll be the day we go over it. So please print off 1120. Now we're going to go straight to chapter 11, which I've been asking you to read for about 7 or 8 months. At least for 2 or 3 weeks, I guess. Chapter 11. Now, there's things we need to get back and do on corporation. But right now, we've got to get to chapter 11. If I can find it. We'll have the test just on 2 chapters, 11 and whatever other chapter, and on that corporate form. There's a lot on corporations that we can never get through it all. And you're not going to be equipped to do a complicated corporation return, but you ought to be equipped, hopefully, within the next 2 weeks that you can do a simple corporation. And you can do a Schedule C, which I think you can do that. All right, I want you to look at page 11.3. 11.3. Now, I'm going to bring up PowerPoint, but we're starting on page 11.3. So I was just telling whoever's listening that you and Hillary made it to class on Thursday. And Cole, they kept us to about 1:30 and they told us to go ahead and go home. But they'd let us back in the building long enough to lock our offices, get our keys or whatever. And I don't know when they got that fixed. All right, now looking at some advantages of a corporation, and you'll see those on page 3, and they list more in the book than they do on the PowerPoint. But the biggest thing, when it says a single tax, the individual's taxed on it like a proprietorship, like a partnership. A partnership pays no taxes, an S corporation pays no taxes. All right, pass through. All of your tax breaks, your 179, your capital gains, and all that's passed through to the owners of the S. And the owners are taxed or pay taxes, or they will take the losses on their personal return. And that's what they mean by splitting income. There's no SE tax on this income. Now, the owner can make himself an employee and give himself a W-2 form. And disadvantages, the earnings are going to be taxed whether you take them out or not. That's what they mean by undisturbed. You didn't give them out. And no special allowances and rest rules. I have to look and see what DRD is. Oh, DRD. I've not seen that abbreviation in a while. But if you're looking at your book on page 11, look at the disadvantages. An S corporation shareholders' marginal tax rate on pass-through income may be higher than 21% of a corporation. The S corporation earnings are taxed to the shareholder. S corporations are subject to an excess net passive income tax. Dividends received by the S corporation are taxed, not eligible for that tax credit. And some other disadvantages, the loss limitation for S corporation shareholders is smaller than for a partner in a partnership, but still it has to be a big S for that to apply. They're subject to the at-risk passive income and excessive loss limitations. C corporations generally are not subject to these rules. It's restricted to the type and number of shareholders. Well, yeah, you can't have so many, what have you, but usually S corporation works for a few people. They must use a calendar year as their tax year unless they can establish a business purpose for a fiscal year. All right. That happened with my son. He did an S corporation. He started last June, and he thought he had until April 15th to file. And even an extension, but no, he had to March the 15th. For a corporation, it's 2.5 months to file. And for an individual, it's 3.5, which makes it April 15th. All right, fewer than 100 shareholders must be eligible, and alien shareholder can't live outside the U.S., so that's usually not a problem. Got to be a domestic corporation, looks like a corporation. One class of stock, which is usually just common stock. An S corporation can own a C corporation. So now, looking at page 4, S corporation requirements. The corporation must not have more than 100 shareholders. All shareholders must be individuals, estates, certain tax exempt, and none of the shareholders can be classified as a non-resident alien. Those three, I am using a 2018 PowerPoint and a 2019 book, but they still have the same rules for an S corporation. And that's what we want, the same rules. Gonna file 2553 for the 15th day of the 3rd month. It's 2.5 months. Existing corporation preceded year before effective year. They'd have to file last year on 15th day of the 3rd month. They consent of the shareholders of course. Now, what does the sub S give you? My son could have had a sole proprietorship, which he did as a chiropractor. But I told him to do a sub S or a limited liability company. Now, the sub S, now the way I understand it, and I was wrong about this part, the way I understand it, the medical profession, the incorporation limited liability does not apply. They are still liable if they injure or kill a patient, even if they're incorporated. But the big advantage for my son, he can be his own, he can make himself an employee, and he can deduct his Social Security tax as an expense for the matching part. And he will get a regular W-2, be treated as an employee. He could actually lay himself off and draw unemployment. Okay? That's an advantage for him. Now, in a lot of lawsuits, he would be protected by limited liability if somebody come in his office and failed. He'd be protected. Corporation. Now, if it's a patient, evidently he's not covered. Excuse me. So he made the election when he first incorporated. Now, termination of the election, if he ever wants to terminate it, can't have more than 25% passive income, need consent from shareholders, can name a date if you want to terminate. But I see no reason to terminate once you started. You can read all this about termination. Selection of a tax year must have a necessary business purpose. Now, I suggest that you use 1/1, let's say 19, to 12/31/19. Now, my son's case, he'll have a short tax year from June 1/18 to December 31/18, short tax year. I want him to have the same tax year as personal and his wife. All right, that's why you'd want them to end on the same date also. But now the S corporation can make their own accounting elections without contacting shareholders. My son is the only shareholder, so he does all that. Uh, all right, these short-term capital gains and long-term capital gains, 1231, 1250, these 179 expenses, charitable donation, dividends and interest, that all comes to the individual. I'll show you that on a K1. But if there was three partners in this corporation, you split up the capital gains. The basis we learned in partnership back in accounting principle, to a ratio, percents, time devoted to the business, what have you. But they take the capital gains and loss, and you know a corporation don't get the 15% tax break. But an S corporation, if they had any capital gains and passed it to my son, he gets that 15% rate. That's another advantage which they don't point out. Charitable donations, S corporation can't deduct them, but the owner can. They don't get the dividend received deduction, big deal. He won't have that anyway. U.S. production activities, he don't get that, but chiropractors wouldn't get it anyway. He's not producing anything. He's taking away stuff. Hopefully he's taking away pain. He's not giving anybody anything. All right. If changed from a C to an S, no carryovers or carryback survive. There's one that survives. Here is your big built-in, that's your big advantage right there. Exempt from regular tax, exempt from retained earnings tax, VHC tax, or minimum tax. Now, but they are subject to the built-in gain tax, but that don't happen, or excess net passive. Passive would be rental property, or you didn't work, or LIFO recapture. Don't worry about those. You'll hardly ever have them. No need to have them. I want you to build in. They're using abbreviations. I want you to see them in case we come up with them. BIGT, built-in capital gain, built-in gain tax. Go back to a couple others. This is excess net passive income. What that abbreviation is. Excess net passive income. Excess net passive income. Passive income, okay? PI is passive income. And PII is passive investment. Or it looks like PI, could be P Roman numeral 2. Then GR is gross receipts. All right, now here is some steps, but what I want to do, I want to bring up a form to show you. Okay, it wouldn't hurt you all to download these instructions for the 1120SK. I wanted the whole 1120, That's 1120. Not 1120 is. I'll have it here in a minute. Sorry. I'll go straight to IRS to do it this time. Okay, finally, 1120S. Let's take a few moments to look at it. The front of it looks just like a corporation return. The front of it looks like an income statement. We have our gross receipts, minus returns and allowances, cost of goods sold, just like a corporation. Net gains from 4797 is included. Now, compensation for offers, just like a corporation. Don't put these two together. They should be separated. Salaries and officers. All right, same thing, ordinary business income on line 21. Now, there is no tax usually on S corporation, so I want you to look at the bottom portion. Net excess net passive income or LIFO recap. You're not going to have any of that. We'll have to look at tax from Schedule D. You shouldn't have any estimated taxes, no tax deposit. Here's credit for federal tax paid on fuels, refundable credits, estimated tax penalty. Usually none of this. So hopefully you'd have zero. Hopefully you'd have zero overpayments and zero amount of, okay? That's your goal on a small S corporation. Okay, now, looking at the rest of this form, there's some differences when you get to the back. Other information. Now we need to practice one of these, C corporation. All right. Here we have Schedule B, other information. Business activity, you got to look up their code, cash or accrual basis, product or service, and then you'll answer just questions. Okay. At the end of the year, did the corporation have any outstanding shares of restricted stock? Probably no. At the end of the year, did the corporation have any outstanding stock options? Probably no. Most of these are no answers. All right. Schedule B, you're in a tax year. Did the corporation have any non-shareholders? Debt that was canceled, was forgiven, or had the terms modified so as to reduce the principal amount? Probably no. K is shareholders pro rata share items. Now, whatever income this company makes, it's going to be reported right here. This won't mark on this at all. All right. Look at line 1, ordinary income. And my son will be taxed on that 100%. He's one shareholder. With 5 shareholders, we'd have to split that and do 5 of these Ks, 5 K1s. If you had 100 shareholders, you'd have to do 100 K1s. Now, these often happen. I had some fellow who lived here in West Virginia. He had K1 from royalties, sub S corporation. The debt ban. Y'all remember the return we're doing for dead man? All right, give you the follow-up. Sarah got Mr. Imlin on it. He's in the road agent like I am. He's taught taxes probably for 20 years, and I've taught taxes for 50 years. Okay? He does some taxes on the side, same as I do. Sarah went to him. I tried to have Sarah to file a return for the dead man. A single is rejected. It's okay. Hers would be accepted. That's okay. Now, Mr. Hummel said that should have been a 1099. And I agree with him on that. Now, Sarah tried to call the bookkeeper. Mr. Hummel was with her and they talked to her. So they called last week. They said they could not issue a 1099. One in software said that's what the software company told her to do. All right, but Philip and I started talking about it this morning, and I said, Philip, they withheld Social Security and Medicaid on this man the year after he died. He's not going to collect Medicaid, is he? Medicare. And Social Security. You don't withhold Social Security on a dead man, especially a year after he died. Now, W-2 shows you had wages. That man was not allowed to make wages. That's why I agree with the 1099. So they called the school board this morning and talked to the bookkeeper. That's when she said, no, software problem. So Philip and Sarah wrote her a letter combined. I had told them about it. They should not have taken out Social Security or Medicare. Now, they should refund that. They can deduct it from what they owe IRS on other Medicares. So a lot of people just don't like to fool with the problem and won't put it on somebody else. But they should issue a new 1099 and correcting W-2, get rid of that W-2, that IRS know it, refund Social Security and Medicare, which is $1,300, or $14,000 down 7.65%. 8% on 14,000. That's over $1,100 probably. All right, I don't know if Tazewell County will do that or not, or if the bookkeeper will do it, but legally they should. So, if you're out there in the county world, don't ever issue a W-2 on a dead man. Don't withhold Social Security and Medicare on a dead man. Don't send that W-2 to a dead man's widow that screwed her taxes up. Okay. All right. Now, what are we going to prorate here? Real estate, other income, interest income. My son would pay 100% taxes. Dividends, he'd pay 100% taxes on them. Long-term capital gains, he'd pay taxes on them. So these you split. If you have 5 partners, you do 5 K1s, and if they had interest income of 5,000, that'd be 1,000 apiece. If they share income and losses in a ratio of 1 to 1 to 1 to 1 to 1, which would be 1/5, 20% apiece. They even share the 179 deduction. You know what that is? That's additional depreciation. Come in, Hilria. You feel any better? All right, now this is page 4. Okay, shareholders prorated share items. More items on post 86. Don't worry about that. Alternative minimum tax items. Don't worry about that. Here's tax exempt interest income passed through. The sub S won't be taxed on it, neither will the individual. Investment income. All right, here's the biggie. In a small S corporation or partnership, you might not have to do a balance sheet. But no matter how small the company was, when I did a partnership or a sub S, I did the balance sheet. So I think you should do the balance sheet. I'll give you a problem probably by Thursday on corporation or sub S. We got to practice one of these. And I'll give you the beginning balance sheet. I'll give you the ending stuff on cash. Now you may have to figure out you don't have retained earnings in a sub S. You got assets, fixed assets, intangible assets, other assets. Now down here you got liabilities. You may have bonds payable, mortgage notes payable. Now you got one class of stock, common stock. Retained earnings, I suggest you have none. Because you're going to be taxed on it anyway, take it off. Have no retained earnings. But whatever, if you have retained earnings, you already paid tax on it. You make $100,000 this year and take out 40, you're going to leave 60 in retained earnings. You pay taxes on 100. Okay, just like you do a proprietorship or a partnership. Now this is an important page of this return. Now, just like a C corporation, you got a couple reconciliation things. Income per book with income per return. Then income per book, income included in K1 that you didn't have here. Expense recorded books not included on K. Depreciation. All right, and then over here, income recorded books this year not included on K. Deductions included on K, not on the books. But if you do the return right, you'll have none of those. You'll have net income here. That's about it. And you may have a couple of things on depreciation. You get them different on the books than you would do on the return. All right. Other than that, you shouldn't have a big deal there. Now, your balance at the end of the year, accumulated adjustment account, shareholders' undistributed taxable income previously taxed, accumulated earnings and profits, goes to your retained earnings. All right. You may have 50,000 in the corporation, shareholders undistributed taxable income previously taxed. You were taxed on it, you put it in the corporation, you're not going to pay taxes on it again. So we'll have to practice a couple of problems on these. Okay, you do cost of goods sold, the same as you do for Schedule C. You do inventory, check off the method. You check off the method, accounting method, cash or accrual, just the same as you do a partnership or a Schedule C. All right, so that's an S corporation. On page 7, at the bottom of page 7, I want you to read election of an S corporation. And I don't think you'd have any of those, but I look at them. I would suggest when you start up a company, if you want to be a sub S, be a sub S. Now, a proprietorship is one person, right? But they can form a sub S corporation. A partnership, if you got two people, don't do a partnership, do a sub S corporation. Now, if you want to form a corporation, pay 21% tax to the government, and then give yourself 50,000 out, and let's say salary, and you're going to pay your rate to the government. And if you're paying 25%, you end up paying 46% to the government on federal tax. So don't incorporate, pay double taxation. Even though it went down from 40-some to 21. I do propose a sub-S. Now, if you're out there in the real world and you want to do, you have a business, you might want to look at a LLC, let's see, limited liability, LLC, limited liability company. Get them literally. Those who've gotten popular, they're treated pretty much the same as a sub-S. You might as well do a sub-S. Okay? The fellow we're hiring will send out references on it this week. And we got two. One was from New York. He was a half Indian. Had the wedding band tattooed on him. Don't you have your wedding band tattooed on him? I wonder what he'll do if he divorced that woman. Just try to wear some kind of big ring over his wedding band. I guess, over his tattooed on wedding band. Then we had a fellow from Asheville, North Carolina. He was teaching at community college. Both of these guys were sharp, but they will need to go out there if they're counseling, or if they have an entrepreneur workshop or a small business workshop. Now, I had an all-day workshop at community college for small businesses. But I had speakers from the community. I had a banker, talking about loans and a business plan. I had an insurance agent telling about all the liabilities they need to cover, not just fire and water. Telling about public, whatever they were dealing with, had the right insurance. And I had a lawyer to do the accounting part on incorporating or not to incorporate. He gave the advantages of S corporation, proprietorship, or a C corporation. I had an accountant that talked about essential record keeping, or where to get a sales tax ID number, or how to get a federal ID number to withhold taxes on employees. So the man that comes in here may have to tell these folks in the community that want to start a business what form do they want? Do they want proprietor, corporation, or sub-S? Okay. You all know we're having this company coming into Bluefield. Cole lives close to Bluefield, and Clayton does. And Hillary, you live where? Where? What town's that near? Town are you near, Clayton?
Brixton.
What town are you near? All right, I gotta show y'all something. A little bit off taxes, but I gotta show it to you. If I did any kind of spell it all right. 10 worst places to live in West Virginia. If you can see that. All right, here's 1919. Do you know the answer?
Yeah, I know.
How'd you know, Clayton?
I've looked it up.
Huh? Where the heck is it then? Right here? I don't know if you can see that or not. Martinsburg. Where is Martinsburg? Okay. Grafton? You know where Bexley is, don't you? Huntington is that way from Bexley. Parkersburg? Is that where West Virginia University is? Is that Morgantown?
Morgantown.
Who lives in Princeton? Moundsville? Who lives in Bluefield? And Oak Hill? Now, what I find interesting here is Princeton and Bluefield. Now, I don't know why they didn't mention little places like Wales. I'm sure Wales is a lot worse than Princeton or Bluefield. Uh, Pocahontas, is that Virginia or West Virginia? All right. Now, Virginia, it was Marion and Wytheville and Galax and Richlands where I live. Little towns in southwest Virginia. What they go by, drug problems, income, unemployment, and they also go by how much money is put into the public school systems. They didn't base this, I don't think, did they have good hospitals, did they have a college, did they have this, did they have that? But Grundy was not on the 10 worst list in Virginia. I thought Grundy would be. That's where I grew up. It has less than Richlands, less than Wytheville, less than Hillville. But they got a law school over there now, near Grundy, and a pharmacy school. Maybe that helped them. Big time. But anyhow, Oak Hill, I guess that's where Channel 4 is. I know they have ABC News. Can't you go through Oak Hill and take that old round, go to Bethel without going up the interstate? I've been through Oak Hill, I think. Or at least I was going to Charleston, West Virginia. I went through Oak Hill.
Yeah.
Um, okay. But anyway, I want to show you. You'd already seen that, Clayton?
Yeah, I looked up the most dangerous thing if you come back. It's 100 dangerous. I think Princeton's first, not second.
Most dangerous to live in?
Yeah.
Now, what do you mean if I went back? If I
Top
hit,
left, like the back arrow.
oh, and they asked those for 10, okay, those 10 places?
100.
Oh, I see what you mean. They had the worst place to live with that same thing. Right here?
No, it's not the top one.
Up one more.
Danger. Okay, I don't know why I overlooked dangerous. Let's see. Out of curiosity. Is number 1 Charleston?
I think I looked up 18. That's 18.
What do they mean by dangerous? Guns and
I guess
let's just look at the list, not scroll through them. Franklin, Huntington, Warrensburg, Princeton. All right. And they're the worst places to live almost, aren't they? Right. It depends. Of course, we don't have the opera. We know that. We may have a country music festival, guitars and banjos, fiddles. But I don't think Princeton and Beckley and Bluefield's a bad place to live. You know, if you're not out, you don't see the crime, you don't take the drugs, you know. As far as shopping, those fellows that were interviewing for this entrepreneur job, they asked if we have a mall. We told them we have a little mall out here, right? I said, what are you worried about malls for? No matter where you are in this country, you got Amazon. You want to shop? Amazon's got it all, don't it? Y'all remember Sears, don't you? Does anybody here remember Montgomery Ward? They were a catalog store competing with Sears. They went out. Now Sears, they had a big catalog. Does anybody remember the catalog Sears used to have? They went down to catalog stores and they went down to little stores. Sears was the first Amazon. They had stayed in business. Kept their catalog. Put their catalog, if they put their catalog on the computer, they had about as much stuff as Amazon does. You can get anything. And Sears had done it right, there would never have been an Amazon. But there is. All right, well, sorry about that. If you live in Preston, Clayton, crime, bad place to live. Lord me, go home and cry. But anyway, okay, so much that is totally off the subject, but if you live in a place and want to stay there, try to make it better. Fight drugs, fight crime, fight for better schools. Okay, stay there and fight for better things if you love the community. All right. Make the election and things throughout the book on that. And termination of the election, you can read it. I want you to go to page 13. I don't know if I lost my PowerPoint or not. If I did, I'm not going back to it. Is it?
It's on the bottom too, right?
Wait a minute. Okay. Way over here.
So,
Yeah. Okay. Here, though, you'll see the same thing when I get you to do a form and the stock. The basis, the stock that my son owns is what he paid for the business, or what I paid for it. Pretty much, he owes me. Now, loss limitation, loss and deduction pass through to reduce stock basis to zero. Now, if the business loses $50,000, now you can't have a basis below zero, can you? If the business loses too much, it's probably bankrupt. But if my son invested $200,000 in a business, all right, and he has losses of 50,000, and he takes those on his personal return, his basis of the business is 150. A loss will reduce your basis. That's all this slide is trying to show you. We'll have to look at these at-risk rules and passive losses again. We don't even have to worry about S corporation distributions. Does the corporation have earnings and profits? Yes. They're deemed distributed from 4 layers of earnings and profits in order until each is used up. Level 1, accumulated adjustments. Level 2, earnings and profits. That's out of retained earnings and dividends. Level 3, non-taxable interest or so on. And level 4, taxable capital gains. All right? You'll see that when we prepare a return. And they mentioned tax preference item. So now let's go to page 13 in your textbook. Taxable year. We want you to end on December 31st. It'll be the same thing as your owners. Any fiscal year for which the corporation established a business purpose. I see no need whatsoever for a sub S to have a fiscal year. I promote calendar year. It makes it complicated. I have dealt with those before. Somebody has a sub S corporation ends in June 2018. I got to take their income that they got at the end of June for 2018. And then I have to take in their W-2 wages for all of 2018. Okay? And if they've been in business a year, then I've got half a year's wage in 2017, half a year's wage in 2018 on the 11/20, then I've got the W-2. Complicates it to have those split years. So everybody do everything on a calendar basis. The individual, the owner, and the sub-agent. Case closed. Okay. Accounting method. Well, it's a choice you have to make. In my son's case, I'll be helping him do his sub-S return. I may propose the cash method because he's got so much built out on insurance that he never received. So if we use the cash method, he has a whole lot less income with the same expenses. So he'd have less than income to pay taxes on. Now, inventory method, if you've got cost of goods sold, if you've got buy and you got purchases, you know, I suggest either lower of cost of market or FIFO. Okay, ordinary income or losses and separate stated items. Again, net income, short-term capital gains and losses, 1231s, 1250 gains, 179 and charitable donations. So if a sub-S, one owner, pays out of his business a charitable donation of $10,000, he takes that off as an itemized deduction on his personal return. Now, if there's two owners and they split that $10,000, each owner takes off $5,000 apiece on their personal return. They just split it. Okay? All right, they mentioned on page 15 deductions that cannot be claimed on a sub-S, the dividends and so forth. They mentioned special S corporation taxes, which I don't think should be any. Now we're going to look at an income tax procedure. I'm going to show you one more form. While I'm looking at it, I'm going to show you that K1, which I didn't show you. I want you to have 1120 printed off and the cost of goods sold section for the 1120. I want you to print off 1120S and I want you to print off the K1 for the 1120S, okay? That's what I'm bringing up now. All right, what does that say? It's K1. All right. All three of you on the S corporation, okay? Now here, we put the corporate's ID number. And we put the corporation name, city, and state. The corporation, all three of you on. Now here, we put code number and his address. And what percent he owned. Let's say 33 1/3. And here, on another K1, we put Clayton's. Now on another K1, we put Hillary's. Three of you own an equal business, 33 1/3 apiece. Now up here, we put ordinary business income or loss. The corporation made $120,000. How much of that would you get, Cole? All right, we'd put 40 here for Cole. Another one for Clayton and another for Hill. No net rental, no net rental. Now interest income. Let's say the business did make 300. How much of that would be yours, Cole? See, all you have to do is remember accounting principle. How do I split profits and losses in a partnership? Equal. 2 to 1. 5 to 1, give a salary, give an interest on investment. We went through all those ways in principle. Now, let's say no dividends, no capital gains. You are not going to invest in anything to have a capital gain or a dividend, okay? No collectors. Now, we get down here, alternative minimum tax, we're probably put none there. Okay. You don't want to pay alternative minimum tax, so far we're assuming you're not. It tells you about each line. Ordinary business income. It tells you about items affecting your basis or credits or deductions, the 179 deduction. Right? It explains those pretty good. All right, that's the K1. That's not going to be hard to fill out. But you take the K on the sub S return to use to do the K1s. K will have 120,000, but your K1s have 40 apiece, right? The K will have 300 interest income, but your K1s have 100 apiece. All right, so try to have some of those forms printed off by Thursday. So looking at the form will explain this chapter better than anything else in the world. They mentioned family S corporations. Go ahead and read about that. I'll get more into the book later. As far as I'm concerned, we've hit some of the main topics, but we'll hit some of them again. Now, between now and Thursday, I also want you to start looking at some of the even problems on the S corporation. On page 42, try to work at least the first 5 even problems. That would be 24, 26, 28. No, wait a minute, not 24. That would be starting at 28, 30, 32, 34, 36. Try to look at those problems. Now, we are going to put a problem on our return. If I can find the one. Well, I don't want you to have to do number 64, but we may do that. We'll be looking at problem number 62, and we'll soon be putting parts of that on the return. Problem 62. Okay, I'm going to let you go because I got to get Hillary started on a test, right, Hillary? She's going to be here for a while. So Hillary, you stay where you are, and I'll be back.
I feel on